I think they're going to raise rates. I think what the report said is that the economy continues to grow. If we kind of average the last 3 months, we're looking at something in the range of 235,000. That's enough to keep the unemployment rate coming down. We're pretty much at the bottom of the forecast range for full employment on the Fed members if you look at their charts. So I think the Fed wants to get going. Unless there's some really bad news right at this point, I think the Fed is inclined to make that move. Keep in mind, we're talking 25 basis points. We're not really talking about, putting, the foot down on the brake at all. So I think the report was enough to give the confidence to the Fed members that they can start the process, which they want to do.
Dennis, I would have to say that is probably the consensus thought at this point, that the Fed will go ahead and raise in September. If they do that, it probably will strengthen the dollar. At least that would be my guess. That stronger dollar has had all kinds of havoc that it's wreaked in the commodities markets in places like oil. What do you think the impact is of that?
Well, I think the Fed is very concerned about a continued strengthening of the U.S. dollar. I don't think they're going to be able to stop the strengthening of the U.S. dollar. I think it's going to continue. I think that really is an overt tightening or a subverted sort of tightening that nobody wants to talk about, but really is quite extant. It's the only thing that will keep the Fed from tightening in the near future is the inordinate strength of the U.S. dollar. Take a look at what's been going on. We really have started the process of tightening. I watched the adjusted monetary base. As I've said here on this program before, the adjusted base is reported by the Federal Reserve Bank of St. Louis, tends to be the stock from which the other soup of monetary aggregates is derived. And the base should always be growing by population plus some number as far as non-inflationary economic growth is concerned. Let's call that 3.5% or 4% a year. And for the past 16 months or so, the monetary base has actually been, at best, sideways, and in some instances has been actually negative. So the Fed has already begun the process of tightening. When they begin the process of taking the overnight Fed funds rate up is really, to me, relatively inconsequential. It's going to go up soon. Then the real question becomes, how quickly thereafter do they move it by another 50 basis points? Or for those of us who've been around for a while, can remember when the Fed funds rate moved by 100 basis points at times in the past in the 70s and 80s. Eventually, it probably shall be great for savers. And I'm with you. I do find it amusing. When I bought my first house, 25 years ago, my mortgage was 10.5%, and thought it was a bargain at the time. It's amusing to me that
mine was 17.5%.
Well, Joel, you probably bought yours just a little bit before I did. I was trading in Chicago and couldn't afford a mortgage at the time. But it's astonishing how we are amused by or dismayed by and worried about a 25 basis point increase in the mortgage rate, as if that's going to shut off the mortgage business. I think it will actually be a reason for people who have stood upon the sidelines to come in and actually take out a mortgage and be more aggressive in buying housing rather than deferring it.